The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour, and thank you Tom O'Brien for a great 2 hours lead-in, and always tremendous information and great technical analysis. So we move right on to the Tiger Technicians Hour with the same number, 877-927-6648, and straight after this, we normally get Larry Pesavento. Larry is going to be taking some time off. So today I'm going to be filling in. So I'm here for 2 hours, and I'll do commodities and stuff like that in the next, and currencies in the next hour. But of course, we always look at these during the show, during my Tiger Technicians Hour. So let's go through what we're looking at today. The Dow has done something that to me was really important. For my subscribers, what I'd shown was a particular technique, and I always give a very enhanced description of what we're looking at in different, both the ChapmanWave notation. I give a big commentary on what we're looking at as an overview, but at the same time, I also talk about chart patterns that might be overlooked by many, but to me, each one of these chart patterns are very important, and certainly within the ChapmanWave. Now, what was important is that there was a falling axe pattern. That's a declining, expanding cone at the top in the Dow at on the 29th of February at 13,055 down to the 12,734 level. It broke out of it. That's the declining. So you have lower highs and much lower lows. Broke out of it on the 9th of March, went to 12,968, went straight up in leg A to 13,289 on the 16th of March. Now what's very important, why have I not got that in? 316. Let me just type that in, 316. So now what's really important is as we've come down, what we've seen is that the Dow is made, first of all, there was a Roman candle. That's a particular ChapmanWave technique. You won't find it anywhere else. It's because it's something that I discovered and I use, and I consider it a very important tool in my huge Sears and Roebuck toolbox. Oh, incidentally, I went to Sears Holdings, Sears Company, to the stores. Where was it? On Saturday. I hadn't been for years. 6, 7, 8 years maybe. So it has improved a little bit. There were some things there that I thought was quite nice, but the stock is still, well, it ran up as a real estate stock. So it's going to be interesting. What was really disappointing, I don't know when I last went to a J.C. Penney, just on the other side of the mall, out in Natick. There's a J.C. Penney, which we went through, also looking for the same thing that we were looking for at the Sears. And, wow, was that depressing. God. The tiles on the floor were chipped and broken and dirty. There were no attendees. There was no one there to help you. We just walked right in and walked right out. It was really quite depressing. JCPenney, maybe it's just one store, but boy, it was very different to Sears. So I was kind of impressed. So with the difference in Sears from when I saw it 6, 7 years ago, when I said, wow, this company is in terrible shape. So I'm not sure whether it's in shape or not. You can't go by one store. I'm just saying the physical appearance and the way things were handled. And the help that was a big difference as well. So now let's look at the Dow. We've got this declining wedge formation. And that wedge formation said, as I said to subscribers, it needs to snap through very quickly, not only above the downtrend line, because now it's a declining wedge. So you've got the ChapmanWave formation. That's the Roman candle. That was the candle of the 20th of March, and that says if you go deep into the wick of that candle, you're liable to not only test the low but break the low, which is exactly what happened on the 21st, went down to 13,112. Then there was another very ugly candle on the 22nd, down to 1317. And then on Friday, we went right to the 13,002.77. I've been talking about 13,000 as being really important. 12,900 is kind of the line in the sand, but on a near-term basis, closing under 13,000 has a psychological mix. It's it would be negative, especially after this formation. So I told subscribers, we've got to watch that 9-period exponential moving average, because if you can close today, if you can shoot above 13,127, 13,190s is the number that I said is going to be very tough to break. Well, today we went right through, we went to 13,219. Days young, just barely begun, not even 2 hours in, and we've got ourselves a beautiful extension of a candle. Cannot be taken away. You can close now at the low. It doesn't matter. You've extended above that 9-period exponential moving average. It tells me a lot of information. Now, after the wedge, very often you come back and you do some retesting. I suspect the 13,127 level on the Dow is going to be the new line in the sand as an intraday between today and Tuesday. That's going to be very important. As I say, a break and a close below 12,900 this week says, uh-oh, we're starting the consolidation. But, yeah, this is really interesting. In the VIX, and I made a big deal of the VIX over the last months, but especially for subscribers, we know what we're looking at. That VIX is at 14.92. It's up 10 cents. It's up 10 cents when the Dow's up 125 at 13,205. The S&P is at 1410. Up 1339, 1412.06 was the high, 1414.00, round number, perfect, on the 19th was the high. If the S&P can break above that by 1 penny, 1414.01, it says that's a new leg C in the S&P. The Dow is to go to 13,289.09, and that will start leg B. If that really is the case, then we've got this entire week to be looking at higher prices as far as the ChapmanWave is concerned. By the end of the day, we fail, and tomorrow's a lousy day, a really bad day. And we start to break down. We go back down underneath the 13,000 level. That will say, uh-oh, be really careful because you've run out of time. You've run out of price. That's going to be a big negative. Right now, that rotation says we should be going higher. Hey, here's another thing. I never expected to see this. It is thrilling to me to be wrong. Now, I know that doesn't sound like a good thing to say. I am besides myself with happiness. Why? Because there's a bidding war going on in the certainly in the Boston, New England area, this part of the area, and a bidding war in houses. Now, I did expect that there would be price increase, and I also suspected that there'd be a tremendous amount of inventory that would be taken off this past winter as people were so depressed last winter they put it on and nothing happened. But this is really a very positive occurrence, and I'll explain why. Once you start the bidding war doesn't just start for a week or two or 3 or a month. It usually continues. It perpetuates itself. So to me, that says that the buy signal that we got in the home builders way back in late November in the stocks says that right now we could be looking at the home builders maybe taking a little bit of a breather. But on the other hand, the real thing, housing activity, and remember I discussed that certainly in the Newton area where I live, houses only came down an average of, it's hard to say. I keep reading different reports, but I'd say maximum between, at the very low of a year or so ago, maybe between 8 and 12%. Other areas could have been much worse. Other areas barely felt it. From what I read, we didn't feel it. And from the taxes, from what the city hall is pricing properties around here, they've actually gone up in price. They estimate, I mean, this is on what they take the taxes on. So that to me is that's a really good sign. I'm not personally, we aren't selling yet, but just on a mood presentation, it is really much better to be having housing prices move higher so that people feel more comfortable. Now, I had to wait for parking at the Natick Mall on Saturday. I inherited my father's gene for parking. I've passed it on to my children. And we can go most places and just go right to where we want to go and we will park. It's a psychological, it's a technique, it's a whole bunch of things. I had to wait for parking on Saturday. I couldn't believe it. I waited about 10 minutes. Something's going on. So let's do this. Let's continue with the narrative of what we're looking at in terms of the prices. We're looking at the comp index up 35. One quick thing. Yeah, there we are. So that's the RTH. So the Dow needs to clear 13,290 to start leg B. There is a potential right now for the pattern that I call the falling axe formation, and that could be a very positive development. So if the Dow fails, that's a failure. Today and closes minus 30 or up 35. But if it's able to sustain this, and you've got to understand there are so many people that have really missed this move, just waiting for the crash to come because of what they've heard in the news, etc. I know that we're getting overboard readings and other statistics, but I think that's the people already there. So when we had a question a quick question about what was the area you were talking about, I will look for the charts in that area and post them so you can look at them. This is the New England. I'm actually talking about Newton, Arlington, I think they said, just in the greater Boston area itself, Brookline, maybe Wellesley. So it would be fascinating to see charts of that. Okay, so the Dow's done very well, but the stochastic and the MACD are still lagging. So that's either really positive because it means that you've got all that room to get them positive, or it's going to be a failure. So this is, for me, in the ChapmanWave, I get asked, where is kind of the most difficult? There are two places. When you're about to get a new buy signal after a very sharp move down in the MACD and the stochastic, but not the price. It's hard to put an up arrow instead of a plus sign. And right now, I can only wait. But in the weekly chart, we've made peak C. I absolutely believe that the ChapmanWave will make a leg D above 13,289.08. I don't know when. I'd like it to be this week. But the sooner we get to leg D in the weekly and the sooner we get to leg D in the daily chart, the sooner we've got to be ready for some kind of a digestive period of possibly time, possibly price. So let's continue. We're going to go to, so gold had a very big move today, up 21 at 1684. I'm going to probably take more time in the next hour when I do Larry's show. We'll look at it, but I'll just jump to the GLD because I know a lot of people like to know where we are in the ChapmanWave. The GLD is just starting a leg A up, and the MACD is stochastic. I thought about this a lot. I was going to buy a proxy for the GLD, one we've had before. The reason why I didn't do it is because I didn't want to anticipate or tell the market what to do because it's not going to listen. I needed the stochastic to bounce nicely, which it is today, 27%. But the MACD, although it's very positive, hasn't yet crossed positive. In other words, positive because of that yellow line, for those of you looking at Tiger TV, remember you can get me at Tiger 11 if you want to look at the archives. It hasn't crossed positively. So I believe we'll have plenty of time if this is in fact a shorter term buy signal that could take us to, say, leg B or C, maybe a D, but at least a B or C in the gold, the GLD. We'll talk about that when we get back. 877-927-6648. Be right back. Love to take your calls.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective and maximize your returns. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
TFNN is proud to bring you the cutting edge of investment newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume in the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to TFNN.com today, click Investment Newsletters, and get Ken Shreve's Ultimate Growth Stocks free for 2 weeks.
Hi, I'm Steve Rhodes, co-host of The Money Masters with Tom O'Brien, seen daily at TFNN.com, author of Mastering Probabilities, a daily investment and trading newsletter, and teacher of The Money Game. Studies show that 3 out of 5 people are afraid for their life in trading these markets, and the number one reason given is fear of loss. Look, fear stands for false evidence appearing real, and the money game proves it. Lesson number 1, don't risk more than 1% of your trading capital on any trade. Why, you ask? Because 35 trades in a row where you risk 50 cents and make $1 are all you need to double your trading capital versus the 230 losing trades in a row you would need to bring your balance to $100. Let me teach you more about the money game risk-free for 30 days. Go to the homepage of TFNN.com and click on my name, Steve Rhodes, for your 30-day risk-free trial. You were born to be a money master, and I'll teach you how.
X-Story Gold Mines, an NYSE Amex-listed company trading under the symbol XG, is slated to be the newest gold-silver producer in Argentina. X-Story is forecast to produce more than $250 million in bullion annually, beginning in 2013, at a cash cost of less than $200 for each ounce of gold produced. That forecast will make X-Story one of the highest margin operators in South America and a sector leader in the mining industry. X-Story has $50 million in its treasury, having spent over $60 million to date on drilling and engineering. The ultimate size of its Argentina discovery could be determined by year-end as results from the 6 drills operating at the site are fully assessed. To find out more about X-Story Gold Mines and their exciting growth potential, click on their banner on the front page of TFNN.com or check them out on the NYSE Amex under the symbol XG.
Here's what people are saying about Tiger TV.
Let's go to John in Tampa. Hey, John, what's going on?
Hi, Tom. How are you, sir?
I'm doing great. You having a good day out there?
A wonderful day. I love your Tiger TV. I watch it every day. I'm like a kid in a candy store.
Oh, man, I appreciate you out there watching it. How long have you been watching the Tiger TV?
I'm watching almost a month now, and it's wonderful.
It's pretty cool, isn't it?
Oh, yes, it's cool. You see the charts and everything. Thanks so much for the hard work.
Tiger TV, a great news service from TFNN.com. This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi everyone, Basil Chapman, Tiger Technicians Hour. So let's just run those numbers, finish those numbers in a moment right here. We've got, so crude oil is up 10 cents at 106.97. Now gold's had a very nice move, and silver is also, this is just on a very short-term basis. Silver needs to climb. It's above the 9-period exponential moving average. I'm looking at the SLV. It made a peak F top at 36.44 back on the 29th of February. Pulled all the way back to 3 days ago. Nice doji turnaround candle at 30.21. Yeah, again, the stochastic's turning up. That's good. But the MACD fast-moving average hasn't crossed positive. It is turning up, and that's good. Now, the weekly chart on that pullback did not pull back as far as the GLD, I believe. Let me see. That's right. So the GLD remained in its up channel, and the SLV also making an arch formation. It's going to be really important that the SLV, which is the iShares Silver Trust Series, that must not close under 30.21 this week, because if it does, good chance it's going to arch over and turn around. If it's able to close anywhere in the 32.92 area, it's in 31.86 right now, up 62 cents. That'll say, hey, this is the first time there's a chance to go to that leg C. So we wanted to cover that. Just quickly, high-grade copper, and then we're going to go to our callers. We've got high-grade copper, a nice move up at 3.88. I'm looking at the, I don't know which one's being traded, but I'm looking at the April copper, and at this particular point, I did this before. HG, what other one is there? HGK. Okay, let's look at HGK. Okay, HGK shows the same sort of thing. So, yeah, it's very important that copper breaks above 3.9400. That's the H contract, the K contract. That's May. So April and May, the same sort of thing. They must break over the high. Copper must break over the high of the 16th of March. And just finally, we go to bonds. And bonds are right now pulling back again, down $1.38 in the TLT. This is a 20-year bond, 111.82. Now, what's really important is that this weekly chart, there's just so many things going on right now that says that the 109.69 area in the TLT is going to be 109s must hold this week, because if it closes below, it says, you know what, you can then bounce back in, but don't expect much more than maybe 119.14 area, something like that, and then a retest. If it can even get there, that's the best case. But the first best case is 114.77. So if it closes under 109.69 on Friday, anticipate a bounce back into the arch formation, but some retest is likely. It's getting closer to a bounce, but let's just see the TBT, and then we're going to go to our callers. Yep, TBTs and leg C. That says good chance in the weekly at some point to make a leg D up. But of course, I like the route. I'm going to go with the route to TLT. That's much more important. But if this TBT breaks above at 20.62, the 20-year Lehman Treasury Bond Fund ultra short, this is going to be, let me just check. Yes, if it gets into that candle of the 22nd and is able to close above 2104, it'll make leg D, and that'll be positive for the market because it'll go to 2156 and over. We got Lou in New Hampshire. Hi, Lou. How are you?
Fine. How are you, Basil?
Very well, thank you. You'd like to look at?
Curious about this stock, LGF.
LGF. That's Lionsgate?
Yes.
Yeah, Lionsgate. So Lionsgate Entertainment making a leg E/C in the monthly chart, and a spectacular move. Just back in February of 2009, it was at $3.65. You know, folks, when we look at these charts, you turn around and you say to yourself, wow, $3.65 to the high this month of $16.19. That's a nice percentage move. So I've got it as probably leg C in there's no other way to count it. I've got it as leg C in the weekly chart, which says it should go to a leg D. The MACD and stochastic are really good. So LGF is the symbol. It's trading at up 45 cents at 14.98. Now, this is fascinating. In the daily chart, are you in it?
No, I'm not, unfortunately.
Oh, yeah, I know what you mean, unfortunately. This is very tough, and I'll explain why. The easy thing would be to say they've got a winner on their hands. I can't remember what it is, but I keep hearing talk about it, whatever the movie is. And at the same time, it's got this platform. It's gone sideways, basically, from, let's call it the 24th of February. The low was 1301. The high was to peak D at 1446, and it went sideways for 3 weeks almost. Yeah, and then it just suddenly broke out to a peak, and I've called that E. You know, I'd like to do a little work on this. I'm also looking at it, so let's look at it together. We've got Lou on the line from New Hampshire. Basil Chapman, Dow's up 127, S&P's up 13. I'll be right back after these messages, and I'll look at LDF.
Hi, folks. Turns out my best student became my best teacher. Steve Rhodes absolutely raised my standards, and I'll guarantee he'll raise yours.
Thanks, Tom. What I've learned is that if you want more, you must become more. And that transformation, folks, that occurs the moment you decide to become a master. Now, the quickest way to mastery is through immersion. And for 2 solid days in Denver, Boston, and Tampa, I'll create a new standard of wealth for those few trader investors who have a burning desire to succeed. At my Master Trader course, I'll teach you how to create the ultimate money machine. These are the best kept secrets in the business. Roadblocks, folks. Dabblers give up when they first appear. Stressors last just a little bit longer, but masters expect roadblocks and achieve extraordinary results when they bust right through them. I have all the benefit of knowing the type of wealth creation that I can generate for you. You don't. That's why I'm making this unconditional money-back guarantee. If for any reason you're not satisfied with my Master Trader course, I'll refund every penny. That's right. I take all the risk and you get all the benefit. Go to the homepage at tfnn.com and sign up today.
Hi, folks.
This is Tom O'Brien. If you want to get great trade setups in equity as well as the option market, come over to TFNN.com and test drive my daily newsletter, Market Insights, for 2 weeks absolutely free. Each trade setup comes with a profit projection as well as stop placement. Included in Market Insights is a Twitter alert service. This allows you to take advantage of intraday setups. Volatility is back in the markets. What does that mean to you? To me, it spells short-term opportunity each and every day. The days of trending up on lighter volume are gone. We have come off the highs with volume across the globe. Don't get caught in a complacency trap. Many of the indices have given back 2 months of trading in 1 week. We have a trader's market. You can take advantage of this trader's market by test driving my daily newsletter, Market Insights, free for 2 weeks. Market Insights will give you the edge you're looking for in the markets. Go to TFNN.com, under newsletter, hit the Market Insight tab for your 2-week free test drive right here, right now.
In the world of financial markets, there's a new player in town with an exciting new way to trade the markets. Nadex now offers binary options as well as bull spreads in a wide range of indices along with commodity and forex markets. With as little as $100, you can gain access to a new way to trade global financial markets while guaranteeing that your risk will always be capped. Nadex allows you to multiply your trading opportunities in ways never imagined before and access markets you once thought were out of reach. With short-term trading opportunities available, including binary options expiring each hour the market is open, Nadex allows you to take advantage of a variety of market conditions regardless of volatility or market direction. Now is the time to take advantage of this exciting new market. Don't let this trading opportunity pass you by. Open your account today by clicking on the Nadex banner on the front page of TFNN.com. Nadex, a better way to trade.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi everyone, Basil Chapman. Dow's up 127, S&P's up 13. The comp index, I didn't even go through some of those things. I'll do that soon. But I want to go back to Lou in New Hampshire. We were looking at LGF, which is Lionsgate Entertainment. It's up 48 cents at 15.01, but it made a recent high, which I am at this particular point still calling peak A/E, with the emphasis more on the E, at 16.19. And the reason being the base that it's formed. So this is the story. The very easy thing, Lou, that I could say to you is start a tiny little position here. Like if you're going to buy, say, 100 shares, you can start with 15 or even 20 right here. But I love the weekly chart. My suspicion is that the pattern I'm looking at here in the daily says that it's struggling to maintain the up move, because that side, what it does is it goes sideways for a while and then it breaks out to the upside. So it's like a stair-step move. If you're in it for the move to the next level, it's fantastic. But you don't want to be buying it at the next level, because it sometimes goes back at least halfway, if not back into the consolidation phase. So and you can tell that this is a rotational market, because now the home builders are quietening down. The financials have done very well. They're taking a little bit of a breather, and all of a sudden you're rotating into some of the high-tech stocks. Oh, I'm looking at one that we had, and I got out of it the other day, Akamai, which is moving up. So you can see that we're moving into the semiconductors, making a leg C or D here, into other areas. So this is a niche market. Now, do you know anything fundamental about it that you like? Is there a particular technical reason or a fundamental reason that you're looking at it?
Well, a new blockbuster movie that's out.
Yeah, but you see, sometimes a blockbuster movie becomes a sell in the news type thing because they're going to have to keep generating that kind of anticipation of income. So I like what I see. It seems to me that they're doing something right because the breakout in this monthly chart, which is really strong, says that the weekly chart in leg C should make a leg D. So this is what I'm going to say to you. Because there are two ways to look at it. Because if you nibbled at it right here, and I said to you, it could pull all the way back to the high of the 14.46, the high of the 27th, which is 50 cents, which is not 10%, it's about 8% pullback. That's still one way to do it. But why? Because if it suddenly spikes up tomorrow and it starts trading at 15.46. Then you're going to overpay. So the question is, do you nibble right now? At least on my basis that there should be a weekly leg D to come. We don't know how long C is going to pull back. Maybe C continues this week. Or do you just have patience and wait? So I'm going to leave this to you, and I'm going to give you two options. One is to start a little position here at 14.98. Why? Because if you give it a 10% stop, and because it's a small position, that's pretty big for me, but on a small position, that's really not a big deal. That's like having 4% on your full position or 3%. If you start a little position here, if it starts to break and it holds into the candle of the 21st of March, in other words, if it can get to 15, the high was 16.19, low was 15.40. If it can get to 15.47, that says that probably the MACD is going to be moving back up again, and the stochastic is going to be turning around, and there's a really good chance that it's going to try to spike this week, if it does in the next 2 days, above 16.19. So yeah, you've got a small position, you know your position, and I would say to you that if it got there and it held at the 15.60 area, you could even add another small position. So in other words, you've missed the best chance, so you can't go to a full position, but you can have two small positions that add up to much less than you originally wanted. That's one way to do it. The other is to either start a little position and then just wait patiently, 14.49, 14.42, somewhere around there, see if it holds, and then you can add another little position as well. My preference is to nibble right now with a wider stop, and within 2 days, when I get back on a Wednesday morning, we're going to know a tremendous amount about what this is doing. But if I'm correct that there's a chance that leg B in the Dow can start, that says that the market generally should move up for at least the next 5-6 sessions trying to get to that leg D. So I hope that helps you. I'm looking out because I'm saying the weekly chart is in leg C. There's a good chance that the monthly chart is not in E. It's more like a leg C. And that says that you could project out. Let me just do this quickly. Measured move. Yeah, there's a chance that we're talking about a $16.90 to a $17.45 stock if everything works out with it holding 14.30 support all week. So I hope that helps you.
So my stop would be 10%?
Your stop on the very small position, I would give it, I wouldn't want that wick of the candle of Friday to be broken into too deeply. So I would say I would have a small, but you're getting out 14.94. 30.92 is too much. I wouldn't give it 30.92. I'd give it under the 9 EMA. 14.37 is your stop on a short-term position. On a small position.
Very good, Basil. Thank you.
Thank you so much for calling. I appreciate it. It's Lou in New Hampshire. Now, I had a question. I had a question if I would just finish some of the indexes, because the other indexes I like to look at, New York, etc. So the IWM would be next. The IWM is about to make leg D in the ChapmanWave. Let me just explain to you, if you're looking at Tiger TV, if you're new to my technique says that in a buy mode from a most obvious lowest low, in this case it's the low on the left side, that on the 6th of March is 78.41, if there is a buy mode that is confirmed by the MACD and the stochastic. They were going to leg C and then we pulled back sharply. You should go not just to a leg A, B, and C. You should get 4 higher peaks. That's as simple as I can make it. And I'm going to go through some of this in the commodities when I do Larry's hour in the next hour coming up. So this is what I'm looking at. To get my leg D in the IWM, the iShares Russell 2000, I need to see 84.40. hit. 84.35 is the high of the day. If it goes to 84.40, I am seeing a leg D. Now, you say, whoa, leg D is where you've got to become a little bit cautious. And I say absolutely, except in one case. And that case is that when you've taken time from a peak C to consolidate, it says you can also go to an E or maybe even an F to the upside. Why do I make a big deal of that? Because if the Dow, let's go to the DIA just for starters right now, if the diamonds are basically, this is leg E/A that we made at 132.61. The diamonds are the trading vehicle for the Dow. It's the Spider DJ Industrial Average ETF. It says that if, let me just draw this because that's kind of the pattern that we'll be looking at, that falling axe. There it is. It says that if you were to break above 132.62, not you, if the diamonds went above, they don't even have to close, but if they do close, it's even better. But 132.62 or higher, I have to call that leg B. If I'm calling it leg B, that means if it's today, imagine it's today. So we get leg B today, peak B tomorrow because it pulls back immediately. Leg C because there's a higher high on Wednesday. And then peak C because it's a lower high on Thursday. Leg D, on the very best case scenario, the soonest it can occur, leg D can start on Friday, meaning on Monday if we gap down, you would get your peak D. Where would that put the IWM? Probably around about a leg F or something. It doesn't even have to. Once it's got to D, it could even start stalling. It doesn't really matter. Now, if I go to the New York Stock Exchange, that's kind of important. NYA.X. Yeah, the New York Stock Exchange has already gone to a peak B. So it's a little bit ahead of the Dow. It's more like the SPY, which has gone to a C, and we're waiting for leg D. Fascinating how these are all working out. The Dow is my major one here. So let's go back to the New York Stock Exchange to tell you that the New York Stock Exchange is at 82.61, up 81, up 0.99%. The Dow's up 1.01%, and the S&P is up 1.01. So this is going to be very interesting because we need the New York Stock Exchange to get to 83.2768 to start leg C. Now we're going to go to our next caller. We've got Warren in Denver. Hi, Warren. How are you?
Hi, Basil. How's it going today?
Going very well, thank you.
Shopping centers are crowded, huh?
Are they crowded down your way?
No, Denver is a depressed place.
It still is. Oh, that's so sad.
There's some of the high-end shopping centers got tourists in them, but Denver isn't doing real good. It was kind of overbuilt to begin with.
Well, when I look at this, I don't know if you recall if you were listening, but I had said back in late last year that when I look at these charts, when I look at the RTH, the market vector retail ETF spiraling to a leg E, in the monthly chart, that's the weekly, the monthly chart is, I've got it as leg C. I have no other way to count it. Well, I do have another. No, I don't have another way to count it. It's G or C. I'm going to give it the benefit of the doubt and call it C. And I can't say an all-time high because it unfortunately doesn't go back to 2000 when the market, that original top back in 2000. But for the life of the contract, it is a high, an all-time high. When I look at that, I say IYC, the consumer iShares Dow Jones U.S. Consumer Cyclical Index, is breaking out in the monthly chart. Is this G or a brand new A? I mean, this is unbelievable. I don't even know how to notate some of this in the ChapmanWave because some of them look like they've broken out into new leg A in the monthly. I can't believe that. I just have to be as conservative as possible. So when I spoke about that, I think that the real estate market in select areas and the mortgage the banks and the mortgage banks or mortgage brokers hijacked the markets because we so quickly got back, and in fact we only came back 55 or 53%. Kind of standard for a major pullback in the markets. It wasn't the 70% that you would think. When this is, in real estate terms, it certainly is one of the worst declines in those sectors. So what I think happened, and what I started to note when I was talking on the show, was I believe that people became so becoming so comfortable with their jobs, for the people that had jobs, that buying inertia, they couldn't stand it anymore. They had to go out and get those things that they really wanted.
Christmas was good here, and, maybe Easter will be good. I mean, there was a lot of people at the mall, but then after that, man, it just dropped off.
Really? Well, here's another factor that I've spoken about, and I'll probably emphasize this a little bit more. If we do want worldwide growth, if we want to see China growing, if we want to see these other countries really develop, what does it say? It says we'll become a universal consumer society. Yep. What does it say to the environment, etc., etc.? So nature has a way of evening this out. I've got an article right in front of me that says A New Ocean Passage with Not Enough Rules by Juliet Kayyem from the Globe, Boston Globe. And she talks about St. Paul, Alaska. I don't know if people realize it, but new shipping lines are opening up, or shipping pathways. The trip from the northern sea route from Alaska to Suez Canal used to be 15 days. Now it's cut down to 10. Why? Because those ice floats and ice flows have really dissipated, and ships can now go right through, whereas before it was impossible. That adds to consumerism because they're going to be able to get goods to new places, right?
All those Korean places and like northern China, like Dalian and stuff, they can all now move goods, up through the Chukchi Sea across and right across there,
Yeah, isn't that fascinating how this all works out? And that also speaks to global warming. It says no matter what you say, I'm not talking about the political issue of the man-made part of it, because we know that huge cycles. When you are flying and you're crossing the Atlantic or the Pacific or whatever it is, you go for hours and hours, and you look down and there's just this water that goes a mile deep. I mean, nature, our Earth, the mechanism is so huge. When you see clouds that go on for 3,000 miles, you say, I don't know what human beings can do. The fact is we are polluting. I don't know what the fact is. But the real issue is, if I've got a chart, I wonder if I've got it right here. Oh, it was moved. From National Geographic that showed, and this was like 5-6 years ago, that over the last 200 years there's been an exponential rise in global warming. Once again, I don't know about the man-made part of it. The chart itself shows global warming, and you can't argue with the chart because that's what it is. So it's a very fascinating thing how these cycles work. So I've gone off on a different track. You wanted to look at?
I wanted to look at the yen, Basil, and I was wondering if this is a drop bucket formation, because you're actually coming in at sort of an Eastern topic, based on the fact that you're coming into Japanese year-end this week on the 30th.
Okay, so I'm looking at the FXE. Is that also good for you?
Or FXY.
FXY. Oh, sorry, not FX. It should be FXY, of course. So I'm going to look at the USD JPY, and I'm going to look at the FXY. We'll be talking about it. We'll be right back with Warren in Denver straight after this break.
Put the power of the ChapmanWave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the opening call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's ChapmanWave methodology for several years now. His ChapmanWave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his opening call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the ChapmanWave, and I very, very strongly support the use of his opening call.
To find out more about Basil Chapman and his ChapmanWave methodology, and to get your 2-week free trial of the opening call, a $64 value, visit tfnn.com today.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to tfnn.com today. Don't miss out on this great offer. Act now. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to tfnn.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Great Basin Gold is a mining company engaged in the exploration and development of 2 emerging gold properties in Nevada and South Africa with a total resource base of more than 23 million gold ounces. Great Basin's Burnstone mine in South Africa opened in February of this year with a resource of 20 million gold ounces, becoming the first mine to open in the historic Witwatersrand Basin in the last 30 years. The Burnstone mine is projected to have a 25-year mine life and is fully financed, with production anticipated to be over 250,000 ounces per year at a cash cost of only $450 per ounce. The Hollister mine in Nevada became fully integrated in the 4th quarter of 2010 with annual production estimates of 110,000 ounces of gold per year over the 8-year mine life at a cash cost of only $527 per ounce. Great Basin Gold is cash flow positive and trades on the Toronto and New York stock exchanges under the symbol GBG.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartley's, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi everyone, Basil Chapman, Tiger Technicians Hour. Dow's up 123, S&P's up 13.45. And what we're looking at here, we've got online, we've got Warren from Denver, and we're looking at the JYM. So if I had to look at the Japanese yen June contract, the question,
yes,
the question has to be, it's a cup formation rather than the drop bucket. The drop bucket was in the USD JPY currency pair, and that was that C1, peak C1 and C2. If you go to the 120-minute chart, folks, what I call a drop bucket pattern really is, it's a double top formation, and the double top formation in the Japanese yen, if I had to go to the USD JPY currency pair, US dollar currency pair, at 84.173 back on the 14th of March at 11 o'clock, it started to pull back, and it went right back to 84.09. It just missed touching that previous high. And then what happens in this particular pattern when the stochastic and the MACD confirm that the high being made is lower in the technicals than it was back at the original one, you got to be prepared that there's a pullback. That pullback means that in this particular cup formation, that it could go back, if it goes back underneath halfway, or if it breaks under the 9-period exponential moving average, there's a good chance it's going to test the low, which would have been the 83.016 low of the 19th of March. If it does that and closes under it, you got to be prepared that there could even be a double of that particular move. And let's just see, I think it's not always a double, but it tells you got to be careful because the projection could be quite deep. And it goes to, well, the double would have been about 81.84, and the low was 81.969. So it's very close. Now you've got a little counter trend rally that's gone peak A, B, C, and D in the 120-minute chart. So on a very short-term basis, it says that there is a chance, especially since it was peak C1, C2, that if the USD JPY currency pair can push above or get into the candle of the 22nd and then even touch 83,464, that it will actually make leg D to the upside. That's the positive side. The weekly is at peak B. That's number one on the biggest scheme. It's only leg A in the monthly, and that A, in fact, I'll go through this in much greater detail when I do Larry's show because it's more appropriate. But in the meantime, do you have a position or not?
No, but I can do it both ways, Basil. I see the cup thing. I do this currencies all the time. Right now, because it was the weekend, I'm out, and so now I'm trying to think of a strategy for this week, actually, is what was going on.
Okay, you know what? We'll work on this together in the next hour, and I'll do a little study over the break when we wrap up the show between the time and I start Larry's. I'll see what I can do. We can see if there's some kind of a strategy we can formulate for the USD JPY. How's that?
That's great. Thanks for showing me those charts and going through those numbers with me, Basil. And I can do it either way, FXY or JPY, whichever way, because different, things, it goes different ways. I can do those inverses in my mind like Bond's find.
Okay, great. So then I'll have this all done. I seem to have lost the chart in the FXY. I'll be able to do that during the break.
It's all right, Basil. I do both. So thanks a lot for looking at those for me. I really appreciate it. And
we'll be looking at those as soon as we get back from the break. So let's do this, folks. What we're going to do here, I want you to look at the XLF. The XLF, which of course is the S&P Select Financial Spider Fund, is about, if it's able to clear 1597, if it can go to 1598, that will start leg C. Do you understand how important it is in my work that we get all these overlapping time frames in different sectors? Because that also is a very positive sign, at least for this week so far. So I'm going to be back straight after this with Larry's show. And so Basil Chapman, Dow's up 123. Let me just give you the picture if you're not going to be able to listen. The picture on the Dow is the Dow needs to break over 13,240. And that could say contest and break to leg B up above 13.
Are you looking for a precision